Welcome again, ladies and gentlemen, to this YouTube video entitled How to Invest in the Stock Market. Actually, this is a continuation of a video I made a few weeks ago called How to Invest in a Down Stock Market. Excuse me. You may wish to look at that one. I'm going to get into a little bit more detail, and this is actually part 2. So how do you invest in the stock market and play it relatively safe? There is no safety absolute in any financial market or even commodity market. You probably have seen the markets have dropped at least 20% from the January high. So, and it could go down more. I don't know. No one knows. It's it's a roll of a crap. It's a crapshoot. So how do you put the odds on your side? Well, in that video, how to invest in a down market, I said, got a little something in my throat here. I suggested you look at the dividend aristocrats and pick out one that's suitable for you. Dividend aristocrats, remember, are those stocks that have paid dividends for at least the last 25 years and have increased them every year for at least the last 25 years. What I'm going to talk about now is getting a little bit more sophisticated, is selling call options on your stocks. Pick a stock. If you want to do this, you got to determine if this is suitable for you, and only you could determine that. That's it. I can't tell you. I'm just going to give you an example. This is just an example. That's all it is. You have to determine if this strategy is suitable for you. But I'll go over it because you need to know it. So let's look at one of the dividend aristocrats. It's actually a fairly new one. It's IBM. The date of this video, IBM was selling for about $138 a share, actually 138 and some cents. It has a dividend of 4.8%, which is very generous. Now, what you could do, if you want to boost your income, you could sell in the marketplace one October $145 call. That gives somebody the right to buy 100 shares of IBM from you. 100 shares, one call is 100 shares. At $145 a share, you bought it at $138. That's about 106 days out from when you sold the call. Actually, the date of this presentation. And for that right, somebody is going to deposit $500 cash in your account. That's your money to keep no matter what. If the stock goes up to 145 or beyond, it will be called away. But in the meantime, you went from 138 to 145 and you got an extra $500. You did okay. You're not going to go broke taking a profit. If it doesn't go up to 145, I'm looking at my notes here, fine, expires worthless, and then you could sell another call. You may or may not get $500. You might get more. You might get less, depending on the price of the stock. The stock could go down, and if it goes down far enough, you could actually take a loss. No guarantees, none. This is a way of boosting your income. But if the stock drops precipitously, it's a nice word, precipitously, you could take a loss. I use this strategy all the time. I like to refer you to this little booklet I wrote. Oops, upside down. It's on Amazon. It's an ebook. Don't play craps with your technology stocks, how to use them to create money. This is actually not just for technology stocks. You could use this for both tech and non-tech. This is on Amazon. You can look it up, write down the title, put it into the search bar on Amazon, and it's $1.99. It's an ebook. And if you can't afford $2, you shouldn't even be in the stock market. But this goes through an example, a real example, real prices, and it gives you the pros and cons of this strategy. I don't want to have a super long video. Get it. Just get it. If you're in the market, you should be aware of this strategy. You may not wish to use it right now, but you should be aware of it. Sort of get my drift? Okay. Anyways, that's a strategy I've been using for a long time, and it works. It puts money in my pocket. It allows me to go to good restaurants, take vacations, enjoy life. I'd also appreciate it if you could do something for me. Could you subscribe to my channel? I would love that very much. Until we meet again, be prosperous, and remember, liquidity is king, not Elvis. Bye now.